Time is actually 6:01, and I, Mayor Pro Tem Willie Franklin, call this meeting to order in absence of Mayor Stanfield. Is he en route or just?
He's en route.
He's en route, okay. So we report that all council members are present, with the exception of Mayor Stanfield. Pursuant to Section 551 of the Texas Government Code, notice is hereby giving of a special call meeting of the Red Oak City Council to be held on Monday, March 30th, 2026 at 6 p.m. in the council chamber here at 101 South Live Oak Street, Red Oak, Texas. And by video conference as authorized by Section 551.127 of the Texas Government Code, at which time the following will be discussed and considered. So I guess we can move right on to public comments. Which the public is invited to address the council on any topic. Speakers should complete a public comments form and submit it to the city secretary prior to the beginning of the meeting. To submit written comments via email, see instructions at the bottom of the agenda. I don't think I have to read that part. Do I have to do the invocation?
No, not on a special.
Okay, good. No problem. Thank you. All right, so we will go into the, well, do we have anyone for public comments?
No, sir.
No one, okay. So with that said, do I need to make a motion or anything to?
No, sir.
Good to go. Let's move on to the regular agenda. We have one item, considering the adoption of resolution number 26-015R of the City Council of the City of Red Oak, Texas, accepting the annual comprehensive final report audited by Patilio Brown and Hill LLP as dated and filed on March 27, 2026, which attached hereto and incorporated herein as Exhibit A and providing an effective date. Mr. McRoberts.
Council, thank you for being here on this special called meeting. I'll just give a little bit of a background on why we're here tonight before I hand it off to John Manning, who's an audit partner with Patillo Brown and Hill, and he'll give a presentation of our annual audit. Senate Bill 1851 was passed last year, which went into effect September 1st, 2025, which put specific penalties on not filing your audit by 180 days after the end of your fiscal year. So we've called this special meeting tonight, and we filed the auditor's opinion with the city secretary on Friday. So we were in before the deadline. But this new law, if you don't file by the 180 days after the end of the fiscal year, you have tax rate penalties and you can't go above the no new revenue rate. So we're here just to make sure we still have some tax rate flexibility. Everything got in on time. And I'll just give a brief synopsis. Our financials are in really good shape. Our fund balances are growing. The city's in a period of strong economic growth. The auditor's opinion is more about fraud controls and kind of anything like that, or anything like that nature. With that being said, is John's ready?
He's on.
Okay. I'll turn it over to you, John.
Okay, thank you, Tim. Council, appreciate you guys letting us be here today. Just to let you know, we kind of have went over a copy of this already with kind of like the audit committee and just kind of looked at it in a little bit more detail than we will tonight, but we wanted to share the results of the meeting. So really what I'm looking at, can you see?
Butt in here and get your name and address for the record, please.
Mine?
Yes, please.
John Manning, and it's 401 West Highway 6, Waco, Texas.
Thank you.
Oh, no worries. So really what I'd like to do is just kind of go over kind of a high level review of the financial statements and the report. And I'd like to start with, can y'all see the report on the screen?
Yes,
Yeah.
thank you.
Okay, does it need to be magnified any, or can y'all see that fairly decently, like when we get to numbers?
You can magnify it a little bit more.
Yeah, a little more would be
A
good.
little more would be great.
Okay. That better?
Frank, for the record, the mayor has shown up.
For the record, the mayor has showed up and I would turn my mic off.
Good to see you again, Mayor.
So 5.
Yeah, John, that looks fine to me.
6:05 p.m.
Great. Well, I'll get back to the financial statements, and what we've got here is what we call an annual comprehensive financial report. And it encompasses more, and I'll go over this a little bit later, more than what's the minimum of what's required for financial statements. So really, I'm going to start with the reason that we're really here, and that is right here on page 1. This is the auditor's opinion. And what we're able to do here is what we're really saying is we're looking at your financial statements, we're looking at your disclosures, and we're seeing if everything is materially correct in compliance with generally accepted auditing principles and generally accepted accounting principles. And that's what we're saying here in these 2 paragraphs. We're able to offer what's called an unmodified opinion, meaning we did not have to modify our opinion for things that the city was not able to keep track of to have full financial statements. We have smaller clients that don't necessarily have the manpower to keep up with things like capital assets, or their controls are not to a point where we can say, yeah, we have a really good idea that these transactions are getting booked correctly. So we have to modify their opinions. We don't have to do that for the city of Red Oak. And there are 4 types of opinions that we can offer as outside auditors. And this is what we call the best or the highest level of assurance that we can offer that the financial statements are materially correct as of 9/30/2025. So you have had this in the past, and it's a big deal, though. I mean, you guys go out for debt, you have grants, you have people looking at your financials for all types of things. And having an unmodified opinion is one of the things that they look for. I mean, bond people want to look and see that, you know, if these bonds are sold, is there a good chance that these funds are going to be spent properly? And is the place we're giving the debts to, you know, are they able to present and record accurate financial information? So that's what this 3-page report is stating. And, you know, it's kind of a feather in the cap to the city to have an unmodified opinion. And starting on page 4, this has been put in several years ago. It's called the Management's Discussion and Analysis. And what this states, or what this really does, is take the numbers that are behind this and kind of break them down into more a narrative format, gives people financial highlights. And it's really the only time where you can see, we looked at this earlier, where the numbers are compared year to year. So you can see 25 in your governmental activities, and you can see 25 in your business type activities, and you can also see 24 right there with those. So kind of like we recapped today, just to go over a few of the financial highlights. If you'll recall some of the things that y'all did in 2025, and we can show you how they show up in the financial statements. But if you look, you'll see an increase in your current and other assets. And predominantly that was an increase in cash. And that was due to several new debt issues that the city issued in 25, where right now that's still sitting, a lot of that's in cash and unspent bond proceeds. So therefore your current and other assets increased over last year. Similar to your capital assets, some of that cash from last year was converted to capital assets. You also had quite a bit of developer contributions of capital assets that they built and turn over to the city to maintain. So those are the 2 big increases there in your total assets. Similar, if you look at your long-term liabilities, you can also see that those increased as well, from about almost 109 million to 123 million, with the bulk of that variance being the issuance of that new bond and being recorded, or those new bonds, and those being recorded as liabilities. Also, one thing that we talked about earlier is the last few years that this number here, your unrestricted net position, has been in a deficit position. And this year, with your continued growth and with your pension liability maintaining its status that it's had for the last couple of years, you were able to get all of those into a non-negative position, which is great. As you can see, you still had a very large net position, but now that portion that's deemed unrestricted on this basis of accounting is now all in a positive format, which is great. Similar to what we just looked at. This is your changes in net position. So this is kind of the revenues and expenses on a full accrual basis. And you can see you had quite a bit more revenue this year than last year. A lot of that had to do with your charges for services. You know, we were looking at things, we compared this year to last year, and we like to look, if there's big variances, we'd like to go in and look and see if we can substantiate what those were. And a bulk of that change in charges for services was in your permits, licenses, and permits, and kind of saw that it really increased. And so we dug around, and the city provided us details with several permits that were for the upcoming data centers. And those are a lot larger than just your commercial or your regular home permits. So we got detail on a lot of those that weren't there last year. So we felt really good that that increase was substantiated and properly stated as of the end of the year. You can see your capital grants and contributions went down. A lot of that had to do with last year, y'all spent more ARPA. I don't think we spent much this year. If there was any, it was very minimal. And you can also see the increase in property tax revenues there as well. And just the continued, with having a lot of those cash proceeds from bonds in investments and the rates being higher than they've been in a long time, you can see your investment earnings went up as well from 3.2 up to 3.3. I remember there for a while, that number was almost not even able to be recorded. It was so small. So it's good to see you guys getting a return on those monies that you let people use. So that was kind of what the financials look like from a government-wide perspective. But what I'd like to look at now is the set of financial statements that the city is used to when you're looking at budgets, and probably when city staff talks about numbers with you, they're probably talking about it more on this format here. And this is your balance sheet. So remember, we're just looking at one day for this particular financial statement. Right now, the city has 6 funds that meet the criteria to be presented as major funds: your general fund, IDC, EDC, debt service, capital projects, and that new or the 2023 bond funds. Not new, but there's still enough money here to where that needs to be a major fund, and then all the other smaller funds are combined into this other governmental funds right here. But we were talking today about some of the things that we do as auditors. When people are like, I wonder what they do. You know, we are looking for fraud, and we're looking for things that don't work, but we're also trying to verify that your numbers are correct. And so when we look at that, we look at risk, like what is the risk that numbers could go wrong? I mean, you hear horror stories of audits that haven't went well. And typically those are because there are assets or liabilities that are on there that aren't very straightforward, and you have to put in estimates or more guesswork into what that number needs to be than just really, hey, this is cash, this is what the number should be. And that's really, when you look here, you have about 45.5 million of restricted assets and investments down here, cash and cash equivalents and investments. And then you have about almost 29 million up here of those. And those we get direct confirmation from third parties. So if you're in the pools, we get a confirmation from the pools. The bank funds, we get confirmations back from the bank where they verify that those funds are there and they're in the name of the city of Red Oak. So the risk of those numbers there being wrong are very low. The other really big part is this 48 million, and that is, if you scroll back over here, is your land held for resale, which in the IDC is about 34.6 million, and in the EDC it's about 13.7 million. And the city keeps a detailed listing of what pieces of land are held by those entities, and so they're put in here as an asset. And then if you sell them, obviously that land would roll off and it would become revenue to the city when those pieces of land get sold. Similar, your liabilities are again very basic. I mean, one of the big ones here is your accounts payable, which is for services that were rendered to the city before 9/30, but paid for after. So we go through and look at checks that were written after year end, ask the city for backup, and we look at the dates of service and make sure that cutoff is correct, meaning you're matching expenditures with the year that the service was provided. You know, we were talking earlier, that some places are like, we've had people that are like, hey, we have room left in this year's budget. Let's put some of 26's stuff back in 25. And we're doing everything we can to make sure that that's not happening. And we didn't see any of that happening at all with the city. So very straightforward balance sheet and not a lot of things that present a lot of risk there. So the other half of your financial statements on this are your income statement, your statement of revenues, expenditures, and changes in fund balance. And that's here. And unlike the balance sheet, which is a snapshot of one day, this is 12 months. And again, we have your 6 funds here that were major, and we have those totals over here. And again, you know, the 2 biggest ones right here, 18.3 and almost 8.3 million, are property tax and sales tax collections, which we get direct confirmation from third parties. So Ellis County lets us know what's went through their office that was applicable to Red Oak, and we tie that back to the city's financial statements. Those numbers worked. You also do the same thing with the state of Texas with the sales tax. We go on to the comptroller's website, look up Red Oak, see the 12 payments that they gave you, and make sure that that's right. So we literally can audit, you know, 60% of your revenues in half a day as far as making sure they're correct. It takes a little longer to get it all put in the work papers and tied in properly. But as far as knowing that the numbers are right, it's not rocket science as far as how those numbers are presented. And again, you can see this $10.2 million number here is your charges for services, which is, I'm sorry, your licenses and permits. And that is what we talked about earlier on that other set of financials. This is the set of financials too, where you can see, if you go down here to the EDC, you can see where there's their $12 million of bonds that were issued on behalf of the EDC. And you can also see the 8.8 that were issued for capital projects. And so you can see that's $21 million there of bond proceeds that came in, along with about $160,000 premium that was issued for those. The big transfer out here is the bulk of it is made up of this number here, which is from your 2023 CO bond fund. That money went over, was transferred to water sewer to work on their portion of the projects. And you can see that transfer in is in this $12.4 million number there. So really, one of the good things here on your income statement is you end the year with about a fund balance of $25 million, which GFOA recommends a minimum. That's their bare minimum, is 3.5 months of a year's expenditures to be in fund balance. And you guys are over that balance by quite a bit. But, you know, we like to see places that do have some financial stability. You know, we think things like pandemics or natural disasters won't happen to us, but they seem to happen more often than they used to. And we've seen that the cities that do have this financial stability seem to weather those things a lot better than our cities that are, you know, where their fund balance is at bare minimum or below those minimum requirements. So we applaud the city for the conservative budgeting and things that they do to make sure that there are reserves there. This financial statement is your business type activities or your funds that need to operate on more of a charge for service basis. Like the ones we looked at earlier are predominantly driven by sales tax and property tax, where these are mainly operated by using charges for services, water bills, fees, things like that. And so again, a very straightforward balance sheet. The bulk of the assets are, again, cash and cash equivalents. There are a large number of receivables here, but that's predominantly the water bills that went out in September. And then also the ones for October, where with the cycle counts, part of those were due back to September. So we made sure those were accrued as well. And you got on here, and you still have a lot of cash and investments in restricted assets for bond projects. So again, go down here, your net position, which is essentially assets minus liability, what's left. And again, positive in all 3 categories down here. So that looks good as well. And here is a 12-month summary of your revenues and expenditures for utility fund and stormwater fund. And both of those were able to add income to net position as of the end of the year. So that's kind of where we are with the financials. You know, we don't see anything here where things are trending in a bad direction, or you know, things like this is the fourth year in a row where your fund balances went down, or you know, hey, this is the third year in a row where you're going over budget a lot. We're not seeing a lot of that here. You know, we talk about, I think Tim mentioned, you know, the city's been fairly prosperous and been able to have a lot of things going on. And you can see here your capital asset activity, you know, we're adding 6.4 million to construction and projects. I'm sorry, construction in progress here. We also had 7.2 million of projects roll off and go into buildings, things that are finished, and they'll start being depreciated. So a lot of capital activity in both governmental and water sewer there. Also, we talked about with the long-term debt, you can see, you know, the 6.085 of certificates of obligation, the 2.785 of tax notes, and the $12 million of the revenue bonds for the EDC. So those things we talked about there, they show up here as additions to your long-term debt. And you can see here where you made your regularly scheduled principal payments on all those obligations for FY25. The other thing that we kind of talked about that we get a lot of feedback from councils are about your pension plan, and you guys are like 95% funded. Your pension liability that's actuarially accrued is about 1.2 million. And I didn't talk about this a lot earlier, but that's what we call an actuarial accrued liability, meaning they take factors like how long people will live, how long people will work at the city, what will payroll increases be, what will salary increases be, and they kind of get an educated guess as to what they think your liability is. They calculate that number. They look at the number of assets that you have pledged to the city of Red Oak in their system. And so what they're saying here is the liability is about 1.2 million less than the assets that are being held there. And that is right here. So your total liability is almost 21 million, but you have 19.4 in fiduciary net position or assets being held in TMRS for the city. So this number is very small, and it's almost essentially this thing is almost fully funded. Then the other thing is your budget to actual. I know that budget process is coming up, probably already started. Takes a lot of time, but you can see here that the city budgets on a very conservative basis. You know, that there were minimal licenses and permits, but a lot of those data center ones came in, so that made it way over budget as far as revenue to the good. And then for your expenditures, you stayed under by about 590,000 there. So we applaud that you guys take the time to do budgets and do them conservatively. And, you know, that's one of the reasons why you're sitting here with almost a year of expenses and fund balance. This year, the city did not spend enough of federal grants to qualify for the single audit, which means we did not have to go look at a major program and test it for compliance with the uniform grant guidance. Also, the city, when I was talking about earlier about the annual comprehensive financial report or the ACFR, you guys present more information than the minimum, meaning you put the statistical data in here. You have the introductory section where you have a transmittal letter. You have all the things that GFOA requires. And the city did get the award for excellence in financial reporting for 2024. GFOA had like 3 or 4 kind of nitpicky comments. We made sure with the city's financial staff to make sure those were corrected for 25. And we really feel like the city should get the award for excellence in financial reporting again on the FY25 ACFR. So again, no findings, unmodified opinion. The financial statements look good. What we got from the city was in very good working order. We did have some adjusting entries at the end of the year, but they were things that you only really do once a year, like adjust property taxes, adjust your sales tax receivables, things like that. And Glory was back this year, was a super big help. Tim and their team, with Sean came on board partially throughout the audit, was a big help in getting us things wrapped up at the end. So we really want to thank them for all their help with what we did and what we were able to get done. So with that, does anybody have any questions or anything that I can help with?
Council?
No questions for me.
So I have a question, but just because it threw the number that I didn't see earlier today when I kind of reviewed this. Can you pull that back up to like page 4, page 6? It was the first graph that said where it trended, the sales tax was less this year than it was last year. So 25, 24. And I don't know if we need to pass this or if that's something that needs to be answered, or do we have a feel for that? There were two parameters on that one little graph page that were negative from 24 in 25 compared to 24.
Sure, I could speak to the sales tax, and that's just the prior year had spikes, mostly due to construction. The general trend, if you kind of take out construction, is still up.
Okay.
It's just, you get those anomalies when you have a bunch of stuff going on. It might spike and it might look like it's coming down the next year, but when you average out that trend over 10 years, it's still increasing. You're just going to have those small anomalies, I think, from year to year, depending on the activity and when it falls, and when it's collected.
Okay.
Sometimes we have really big payments that only happen once a year, but we don't get them every year.
Okay.
And I think for sure one of those happened in the prior year.
Okay.
So,
Yeah, it just stood out right then when I saw that, and I was like, "Whoa, why are those three?"
Yeah, I'm trying to get to that sheet. I'm trying to.
It was at the beginning. I should have interrupted at that time, but
You talking about right here?
yep, that's it. So, yeah, and then there was one other one that
was it court fines?
I don't think it had as much as the net position. I think it was before you got into the sort of one higher up. Right. Was it there? No, go up more.
That's the
But
beginning.
that's really the first place that we started looking at numbers.
Okay, well, never mind then.
Yeah, it's all sales tax.
Okay.
There was another one that was down.
Yeah.
It was fines and forfeitures.
Oh, so
The court fines are down because of the way we're not allowed to collect as much as we used to be. There's certain rules about who we can collect from and income limits and stuff like that. Also, general citations, are just, that's the way they trended. And
Public Works. So on that one right there,
Or the
that
the
expenses.
hotel tax went down.
Anyway, that's fine. It just stood out when
Yeah,
you were talking about it. I just,
Public Works here is that's expenses. So those were
good, in a good way.
yeah.
Okay. All right, cool. Any other questions, council? Thank you, sir. I'm sorry, John.
No, that's what we're here for. No problems. The sales tax, the kind of, we're not, all we able to look at really is what the state sends you. And Tim's right. There are some spikes that some of the times they pay you and 2 years later realize that they shouldn't have been paid and they ask for it back. I mean, they kind of, we have to kind of go with what they send us. So, when I was saying that it's been trending up, I thought there was a 10-year trend information in here. Well, there is. Hold on.
I think it was in the appendix later.
Yeah,
Or something.
later on.
Yeah, I think.
Yeah, see here. Can you see these numbers, Mayor?
Yes,
Being 17.
So
so
see,
still growing.
you can still see that. I mean, it was in 2019, it was 4.7 million. And now it's up to 8.2. So
Okay.
like they're saying, no, it's a good question because I did comment earlier that everything has been up and that's actually not up. But I think Tim's right in the sense that there were some spikes there and some one-timers. But again, what we're looking for here is like, did it just fall off and did the relationship not make any sense? And we didn't see that.
Okay, cool. Thank you, sir.
I'll
Yeah.
use that to segue into my comment that, one of the things that we've done very consistently through, different finance directors and different budget years is to be conservative with these numbers and not try to pile on to good years by expecting we'll see those again. And so, something like that shows why that's a good practice. It helps make sure that we don't overextend ourselves. So I think that's been a discipline we've had for a while, and it's a good cultural discipline for our budgeting process. So.
Good point.
No question.
Sean, anything?
I was also gonna say, John, I appreciate, that was a very well-delivered summary. This is dense information for those of us that don't see this every day. I appreciate your 20 minutes or so explanation. I felt like I felt pretty good about the information, so thank you for that.
Good, no worries. I appreciate hearing that. And again, it's kind of the reason it looks like this is more on city staff than us. We just, they don't do these all the time. We do. So we help get the numbers where they need to be in these reports. But the numbers and the way things look are the council and staff giving us the good information. So I appreciate the kind words.
Yep, thank you.
So in other words, they secured their job? Is that what you're saying? They didn't try to pull something over our eyes or anything?
No. Very, very straightforward. Use the portal to safely share, some of the stuff that we look at is a little bit sensitive and we don't want getting out. So they use our portal. And Gloria and the team had a bunch of stuff in there and we were able to get started. And, like I said, I think last year and, we've had COVID, we've had all these different things where we've had to get some extensions for GFOA in the past. And this year we're here, before March 30th or March 31st with a final ACFR that looks really good. So, a lot of that goes to you guys.
Thank you, sir. All right, so Mr. McRoberts, so we're, it's not a public hearing or anything like that, so I just will entertain them. I assume you read this, Mayor Pro Tem, is that correct?
Yes, sir, I did.
Okay, all right. So I entertain a motion to adopt resolution number 26-015R, City Council, City of Red Oak, Texas, accepting the annual comprehensive financial report audited by Patilio Brown and Hill LP as dated and filed on today's date or then?
March
27th, which is attached hereto and incorporated herein as Exhibit A and providing an effective date. I'll entertain
So
that.
moved.
Second.
Councilman Lightfoot, Councilman Miller, those in favor?
Franklin, aye.
Planner, aye.
Miller, aye.
Lightfoot, aye.
Smith, aye.
Excellent. Thank you to your staff and getting that. Thank you, John, if you're still on there.
I am.
Okay. Thank you very much for y'all's hard work and getting that in before the deadline, so we didn't have to get an extension. And thank you, council, for showing up for the special meeting. And the time is 7:34, and I'll entertain a motion.
6:30.
Oh, I'm sorry. 6:34. Time's getting away from me. 6:34. Entertain the motion to adjourn.
So moved.
Second.
And those are,
Franklin.
yep,
Miller.
Planner, aye.
yep,
Lightfoot, aye.
Smith, aye.
yep, that's fine, sir. You got them? Excellent. Thank y'all very much.
Thank you very much.
Thank you.